Hello everybody, this is Patrick MontesDeOca, CEO for the EMA to Trade Live Signals.com. What I would like to do here on this special segment that I'm producing particularly for the benefit of my subscribers to break down even to a more basic form the process that I go through as a trader basically in applying the VC PMI automated systems which are currently running on the TradeStation platform. The algorithm is basically a variable changing price momentum indicator. It's an intelligent automated algorithmic trading system developed by over a decade, I would say, by myself, Patrick MontesDeOca. And the primary driver basically of the VC PMI is the principle of the reversion to the mean, combined with a range of analytical tools including fundamental logic, wave counts, Fibonacci ratios, Gantt principles, supply and demand levels, pivot points, and moving averages, momentum indicators. And what we do is we actually take the science of Vedic mathematics and use it to combine all these various elements into a comprehensive and accurate structure and a highly predictive trading system. And I'm going to get into more in detail and explain to you in a very basic, simple way how this works. It's taken me a long time to bring it down basically to a simple, basic format that one can understand. And if I can make it very simple for myself, then it makes all the sense in the world that other traders would be able or should be able to interpret it or basically have the same results that I'm having. And I'm going to show you all completely transparently the way that I'm using this incredible system. The complex multifaceted system is completely automated and it's available from the TradeStation Technologies App Store. What I do is I essentially produce these levels which are supply and demand levels that we produce for the following day. This gives us an idea for tomorrow's trading, what to expect. It identifies for us levels of support, levels of demand, basically. And we have identified the demand levels in blue. And the program identifies basically two levels, buy one and buy two levels of demand in blue. The VC code is the pretty much the mean or the average price for the day, and the red zones are the supply zones that have been identified for the following day, which are the sell 1 and sell 2 levels. Now, what we do is we basically use the reversion to the mean concept that when the price comes down into the buy 1 levels, it activates basically a buy signal. Coming down into that buy 2 level, it activates another buy signal. We have chosen to use 5 levels, which is a perfect Fibonacci number, in order to identify the extremities of the reversion to the mean using the supply and demand levels here that you see. So essentially, what we do is, what I do is basically look for the price to come down into these levels of 1321.50, or in that area, you might say, between 1315 and 1321.50, and this is telling us that we should expect some kind of demand. We're going to take a look at the real market conditions and see pretty much how this applies to the real market conditions that we use. The 1331 is the mean of the average price that is expected for tomorrow or today's trading actually, and basically the automation and the concept, the methodology tells you that the levels of buy 1, buy 2 should be bought. If the market penetrates 1331, that can be used as your target from the purchases you made between the buy 1 and 2 levels. But going through above and closing above the VC code for the day, as we day trade this information, basically it activates for us a buy signal, and it activates and puts into place the extreme reversion to the mean, you might say above the mean, the extreme above the mean of sell 1, which is 1337. So basically the signal is activated at 1321.50, or in this area. The first target is 1331. A close about 1331 activates the extreme above the mean of 1337.50 to 1347. Let's take a look at the real platform here in TradeStation pretty much and see what it has done here today. What you see here on this chart to the left here are the levels that I just presented to you previously, and it indicates to us in looking at the gold market that this activated a buy signal at the buy 1 level, as I said to you earlier. And automatically, when the signal is activated, it structures the trade by essentially identifying the profit factor, which is the first target, which is the average price of the mean for the day, or the VC code as we identify it in green. The signal was activated from buy 1. The target automatically is the VC code, or the target above, or the level, you might say, above. So if you activated at 1321.50 or in that vicinity, your target was 1331. And we're looking at the high here today at 1334.50. And the mean, or the average price, was basically at 1330.90, 1331. Okay, so the automation automatically identifies these trades and executes them automatically using TradeStation platform. When the order is executed, obviously it goes neutral, and then it waits for the price to activate any of these levels of supply, which are in red that you see here, or basically in blue that you see here as buy 1, buy 2, which are the demand levels. So what we do is basically we trade the extreme above the mean, take profits at the extreme above the mean in red. When the market is in red, it pretty much identifies the area to be at an extreme above the mean. It recommends to go short, as you can see here. These are actual trades that have been done by the automated system. And once executed, the sell 1 level, it automatically targets, structures the trade, and it gives you an objective, a target right away, and sets the price for that target to be executed, as you can see here. After that order was executed, obviously the market came down below buy 1. It activated a buy 1 level signal once again, but it being that it was on the close, a day trade, on the close is the signal to liquidate the orders for day trading, and this is exactly what the program did, as you can see here. Okay, and if you go back to all of the signals, the automated signals here that obviously you see have been activated the previous days, each of these windows here signifies basically a trading date. You can see here another buy signal here that was activated and was taken out on the target as anticipated, the previous day. What you see here on the right is basically the equity curve that we've been able to produce in a total of about 250 trades, that we have traded with the high net asset value to be at a profit of $33,853 using a $50,000 model account. So you can see that the profit factor is pretty phenomenal, and it's completely automated in basically this program that is traded here on TradeStation is completely automated and documented by the TradeStation platform. As you can see here, the return is truly phenomenal. Return on documented trades in 5 months, 29 days, 2 hours and 59 minutes. The platform has been able to produce a phenomenal return on initial capital of 60% during this period of time, as documented here on the TradeStation platform. I will be publishing more frequently the results of this tremendous automation that we are using basically to benefit ourselves, and also for the benefit of subscribers, or for the benefit of people that are interested in a real automated trading program. This is Patrick MontesDeOca. Once again, my friends, until next time, be well. Take care. Talk to you soon.